Imagine a retailer whose shares have surged more than 30% year-to-date, while many peers lag behind. That's Costco Wholesale today, the S&P 500 heavyweight that just cracked the coveted four-digit club in early April 2026, signaling a market cap over $200 billion. Analysts are buzzing because, unlike typical discount chains, Costco's revenue per member is climbing, and its stock outperformed the broader index by over 8 percentage points this year. This rapid ascent is the clearest sign that investors are rewarding businesses that can weather inflation and supply chain shocks. As of Monday, July 6, 2026, Costco's shares are trading around $620, a level last seen in late 2023. The company reported fiscal Q3 earnings on July 1, beating consensus estimates by 7% on earnings per share of $5.45. Membership renewals hit a record 61 million, up 3.2% year-over-year, and comparable sales rose 5.6% despite a modest slowdown in discretionary spending. The latest Insider Monkey piece highlights that institutional investors are increasing allocations to Costco, citing its low churn rate and strong cash flow generation as core defensive attributes. Two key events have accelerated the momentum. First, the April 2026 entry into the four-digit club, a milestone that triggered algorithmic buying from funds tracking high-cap growth indexes. Second, Costco's strategic rollout of a new private label line, Kirkland Ultra, which now accounts for 12% of total sales, up from 9% in 2025. AD Hoc News noted that this expansion has lifted gross margins by 40 basis points. Additionally, the company announced a partnership with a leading renewable energy provider, aiming to power 80% of its warehouses with clean energy by 2028, reinforcing its ESG credentials. For shareholders, the surge translates into a robust total return, a 31% price gain combined with a 2.2% dividend yield, delivering an annualized return north of 14% since the start of 2026. Retail analysts at Seeking Alpha argue that this performance is cushioning portfolios against volatility in tech and energy sectors. Consumers feel the benefits too. The higher membership base has enabled Costco to negotiate deeper supplier discounts, passing savings on through lower price points on essentials like fresh produce and gasoline. The ripple effect is evident in grocery price indices, which have stayed roughly 0.3% lower than the national average this quarter. Looking ahead to the fourth quarter, analysts project comparable sales growth of 6% to 7%, driven by the upcoming back-to-school season and the launch of a limited-time summer essentials bundle. The company's guidance suggests earnings per share could reach $6.10 by year-end, maintaining the current forward price-to-earnings multiple of about 13.5x. Moreover, the ESG initiative is expected to lower operating costs by an estimated $150 million annually once the 80% clean energy target is met. In short, the convergence of membership strength, margin expansion, and sustainability investments positions Costco to remain a top pick for resilient stock investors. In a market where uncertainty still looms, Costco's blend of a loyal membership model, disciplined expansion, and clear ESG roadmap makes it a rare example of a growth-oriented yet defensive stock. Today's 30+% rally isn't a flash in the pan, it reflects a broader investor conviction that Costco can deliver steady cash flow regardless of economic headwinds. If you're building a portfolio that needs both stability and upside, Costco should sit prominently on your watch list.